Good afternoon to everyone and welcome to our Tax Technology webcast. My name is Ilona Paakkala and I'm leading the Indirect Tax Technology business here in PwC Switzerland. Our webcast today, as also the previous ones, will be recorded, and the link to the recording can be found from our Tax Technology webcast series website within a couple of days. Our topic today is reclaiming of foreign VAT.
Whenever your employees travel abroad for business, you'll always get a lot of costs, which include foreign VAT, and going through all of these invoices to verify the VAT can sometimes feel like very hard work. So instead, you leave the foreign VAT and don't try to claim it. So it becomes a cost. Are you spending time and resources reclaiming VAT? We can help. Hand over all your invoices physically or scanned, and we will take care of the rest. We'll do all the hard work. We'll go through the invoices and find which invoices are eligible for a VAT refund. And then we'll prepare the VAT refund claim for you. As your company's VAT director, we'll keep you constantly updated with what's happening in every country and every part of your business. With our Global Reclaim Assessor, our GRA, you'll be able to follow the whole process of when the invoices are submitted to PwC for processing, see when the invoices are processed, and what is the amount of the VAT refund request in which country. You'll also be able to track if invoices are rejected and why, and the amount of any rejected invoices. This can all help to show your staff how to get VAT refunds for the company in the future. It can also help to reduce costs by showing your staff when VAT needs to be paid and when not. And it helps to reduce the number of questions from tax authorities, because we've already checked that everything is okay before submitting your VAT refund application to the authorities. And you can save time and valuable resources to do other important work. So take a look at our GRA and make the complexities of foreign VAT simple.
In our webcast today, we will discuss about the challenges involved in deducting VAT in the countries where the company has registered only for VAT purposes, as well as claiming VAT refunds in foreign countries where no VAT registration exists. In addition, we will discuss how easy and efficient IT solutions can help make the effort of deducting and reclaiming VAT financially worthwhile exercise. I have here two of my colleagues with me today, Janine and Salt. Could you please introduce yourself?
Yes, thank you. My name is Janine Heiberg. I'm working for more than 10 years here in the VAT department within PwC Switzerland. I'm dealing with national and international VAT, and I also supported many companies in their indirect process improvement.
Good afternoon. My name is Zsolt Rendszer. I'm working in Switzerland for PwC, I think 7 years. Before 15 years altogether with PwC. Previously in Hungary, working in VAT and indirect tax topics and all kind of international tax or cross-border VAT issues.
Thank you, Janine and Salt. Okay, then let's go to the topic. The time to apply for the VAT refunds on expenses incurred last calendar year in foreign countries is coming closer and closer, as applications have to be submitted partly already by the end of June and partly by the end of September. When we are talking about the foreign VAT, what do we mean?
Foreign VAT, our topic is basically concerns VAT that is arising for a company or for business in a country where they are not VAT registered. For example, if a Swiss company would be VAT registered in an EU country, then they could recover all kind of input VAT depending on the local recovery rules in that country under their own registration in the periodic reporting. However, if they are not registered, they have to look for another possibility. For a non-EU company, it was previously known as the 13th Directive Reclaim in the EU, or for the EU companies, 8 VAT Directive Reclaims. What kind of purchases we are talking about? It could be two kind of main areas where we could split up. VAT arising of services purchased abroad. The scope of these services, I would say, was already drastically reduced with the EU VAT package in 2010. Since that, the most or the basic rule is the place of taxation where the customer is located. If we are talking about the taxable business, it means that most likely a foreign service provider will not charge VAT to the customer. There are still exemptions, a few notable exemptions. For example, travel and accommodation. This is the basic or the biggest chunk of these expenses that we are talking about. I would say when we are talking about travel expenses, travel and entertainment expenses, the focus should be probably on hotel and accommodation. Most likely international travel is usually exempted already. What we see here is the relatively low value invoice amounts with relatively low VAT, but with a significant number of invoices. Besides these, there are still a few service elements like transport, certain transport services, real estate related services that are usually or mostly still fall under local taxation within an EU country. So there will be local VAT charged to a foreign customer. There are also in aviation, there could be several charges related to air freight fare or to ground handling of airplanes that can be where there could be charges locally. Besides these, there are also VAT could be charged on goods purchased in a given country or arising on importation of goods in a given country. It's a really tricky situation here because if you are doing these purchases for resale purposes, then based on the resales, most likely the foreign company might become liable to registration locally. In that case, it's already a risk arises. What you recover, if you recover something based on that purchase, you will be required to register in this country. Then requesting the VAT refund can cause serious trouble for the company. However, if you have purchases for all your own business purposes and without local resale, then recovering the VAT might be a really important step. For example, just two examples mentioned here. One of them is clinical trials for pharmaceutical companies where whatever reason there are charges in relation to that one, or for production companies if they are tooling costs charged with VAT, then these are really could be significant amount, but it is worth to try recover this.
Okay, so how much companies are applying for VAT refund on expenses from foreign countries? Do we have a knowledge of that?
Yes. So basically, it's interesting. The VAT shouldn't be a business cost. It should be neutral for businesses. However, foreign VAT remains mostly not recovered around the world. And based on a research that was done a few years ago, almost quarter of the companies recovered less than quarter of their foreign VAT. It was a similar ratio where the entities or the research subjects say that it's like less than 50% of their foreign VAT is recovered. And there was a part where that was really actively managed, and they still could recover a significant part of their VAT, but it was far away from 100. Why there are limitations in the recovery? There are various reasons. One of them is that submitting a refund claim it can be really a burdensome procedure. It will require for you to know what are the local regulations, and based on that, whether the invoice that you receive from your supplier makes you eligible to recover the VAT. It's in case of a foreign VAT refund request, tax authorities are much more picky. Let's say that way. They have been more strict to look at invoice requirements, whether everything is fulfilled. They could go much deeper than with a local company to look at the documents that serve as the underlying supporting document for the VAT recovery. Also, it was required to have original documents in the past to submit these original documents. That is already changing. We will talk about it a little bit later. What are the costs? It's not mostly within your own business environment. You have to use foreign suppliers. You have to use people or service provider with local knowledge. And it's also worth to mention that the biggest chunk or biggest obstacle is if there is no refund system in place or the VAT incurred is not recoverable for foreign companies. We will talk about this a little bit later.
So from which countries it is possible to apply for the VAT refund? And from which not? Of course, we cannot do through country by country, but like an overall picture.
Yes. Yeah. In the EU, there is already a framework that has been in place for years or for decades. Also, if you look at Europe, Switzerland is also kind of like an easygoing country from that perspective. Still, from these EU countries, a lot of them insist on reciprocity when they are talking about non-EU partners. So they insist that if you are coming from a non-EU country, it should be some kind of a mechanism in place where also their own companies can recover locally charged indirect tax, VAT in the other country. It's already a little bit of a tricky situation because this is usually not really published in too many places where reciprocity agreements in place. So it's like even for a consultant to get this information out is background information from ministries, and it's like from tax authorities' experience whether they accept it or under what conditions they accept companies from another country to recover VAT locally. If we are talking about non-EU countries, then it's even more complicated because a lot of countries they do not allow recovery, or they are allowing recovery for specific companies, for example, like tour operators or some similar entities, for example, in Canada, or they still insist, even if it's a foreign company trying to recover VAT, they insist that the foreign company somehow registers locally and have an account, some kind of a reliable connection to the tax authorities, for example, in Australia or South Africa. And also the scope of the purchases on which they pay back VAT is also limited, maybe related to fuel purchases or related to exhibitions. So it's like a really quagmire of different solutions all around the world. You have to look for every country what is allowed, what can be recovered there or not.
Mm-hmm. So you mentioned previously that the costs for reclaiming of foreign VAT can be that high that in the end it does not make any sense to apply for the VAT refund. How much the costs can then be in practice?
Yeah, this is also a bit explaining the low recovery ratio, whether it's worth to take the hassle looking at the cost of a service provider that are in the past usually worked on a contingency fee basis, going from 20, 30, 40% of the recoverable amount. And also you have to add the internal cost of the company. So it's like you have to get out documents, somebody has to gather these, send it to somewhere, have a connection with the service provider. So based on that, if you look at the chart here, is like somewhere the cost of recovery could reach 15, 20, 25%, depending on the country and the companies involved who are providing these services.
Okay, so usually the reason behind the costs are using the service provider, or also like handling and processing the invoice system itself, that it's doing the claim is also taking part of the refund in a way.
I would say historically it was really the biggest pain and the biggest cost came from these complicated administrative procedure. If we are talking about travel and entertainment expenses, these are invoices with not really a high value VAT amount on them, but it's still you have to handle these invoices. You had to send it to the tax authorities. Original documents. This is already changing in the last 5, 7, 8 years in the EU. It's, for example, for within EU company, for within EU reclaims from another EU member state. The electronic submission of documents and electronically sending documents to the tax authority become the norm already. There are already some tax authorities like Finland, as far as I know, where they also, for non-EU companies, they make this possible to this electronical exchange of information. So it was a long way for recovery in the EU from that perspective, and the tax authorities were really picking on everything what is on a paper invoice, trying to find any kind of material point or even non-material formalistic point based on that they could challenge the invoice. And now it's moving into the direction where it will be more and more electronically handle the whole flow of information. They can still request original documents, they can still reach out, and you will need more likely local support in some form to handle these communication or requests from the tax authority. I would say that outside of the EU, there is still a lot of potential for automation. This is obviously first on the side of the tax authorities. As much as more the authorities move into an automated way of communication, the more can companies try to build on IT or technologically savvy solutions in their recovery process. It's an interesting question whether this, if we are looking at this, that it's like what an EU company can do and what a non-EU company can do, and how much limitations are in the possibilities for them, is whether it's possible, for example, for a group, for a multinational group to reorganize activities that way, that, for example, an EU entity is handling all the travel and all this kind of related expenses, and kind of like recharging within the group, whether it will be a possibility to avoid some of these administrative hassle or not.
Okay, then what kind of a support the companies can get from the service providers for the VAT deductions in the countries where the company is VAT registered, or for applying the VAT refunds from the foreign countries?
Yes, I think it's like we put it that way. There is this traditional model where there are some of big four firms, but most likely, most rather smaller niche firms were specialized in this field. They try to streamline their processes as much as possible. They took full responsibility for the VAT recovery. And then, based on that, they could work on a contingency basis really easily. They had local support everywhere, and it's really a manual process. That is kind of like the traditional model. What we see now on the market is moving to a new players get on the market using these possibilities of technology, but it's not a global possibility because it's still, as I say, there are countries that have different restriction, what you can do automatically or what not. So basically now it's a lot of technology and cloud-based software applications come into the play. What service providers are offering are OCR, optical character recognition. Based on that, reading, if you send the original document to them, they are basically scanning and reading the content of the document. It's a bit futuristic, but it's already there, kind of like a machine learning from that what kind of documents you get, identifying for service providers, for typical service providers, knowing that whether they are already eligible, but it's content-wise and the invoices requirement. Machine learning will be really the future when a computer kind of like can identify your incoming can sort it out, your incoming invoices that are electronically scanned, and decide on the eligibility for refund. Obviously, I would say at the beginning there is always a human learning element beside that, but it's like the more invoices we are talking about, it will be much easier to become automated. Because these are, let's say, technology-safe solutions. So besides the recovery, there are also additional elements that are increasing your user experience. You will have a transparency and the tracking where the system is, where the invoices are, what is the status of the refund, where is until they get to the tax authorities, because on the other side it will become a little bit of black box. A kind of like offering a dashboard. What is the situation? How much is the cost? Or how much is the recoverable amount? It's also kind of like a holy grail if we are only talking about T&A expenses. It's when the service provider is able to link the company's internal travel and expense management system to the tax authorities, or kind of like interfacing them. So it's like getting out the information that is already in a company's internal system and using that information to prepare the submission to tax authorities. Some of these new players are really technologically oriented without too much local and professional support. That could be a really interesting question mark for this assessment for you when you decide on this. But if the service can be digitalized, it is done. But if there is any further support locally, if any assessment needed on that one, it's a question mark what they can use. What is the distinctive features of these providers? What based on that you can decide is also an interesting question, not only about the pricing but the price structure. Whether they offer you fixed pricing or contingency pricing. So it's basically depending on the number of documents. They say that it's like you get a fixed amount, or depending on the recovery. It's obviously it's a business decision on every company side to decide which one makes more sense. You will need to have a kind of like a bit of an analysis before what would make more sense for the company. Whether the future belongs to the first one, to the fixed pricing, or it will be a mixture, it might be a question. I would say it a bit depends on the embedded risk. With travel expenses, maybe, or accommodation, the risk is a bit lower, so it's like easier to even think about it, doing it on a success fee basis. But if there are risks where you have to also think about it on the recovery, well, what other risk could create, then the pricing could become secondary.
So when we think about the risks and questions which remain when the companies are using and relying on the service providers, what could these be?
I think what we could see is that optical character recognition or all these technology-based features are interesting. At the moment, they still have some weaknesses, especially if we are talking about multiple languages. So it's like teaching, let's say in brackets, teaching a computer English, that could be easy. Teaching a computer Finnish might be not so straightforward. At the beginning, a human control or intervention is still needed to lead these solutions. Most of these new players are focusing on travel and expenses, where the potential issues are limited. However, if you have other recoverable foreign VAT, then I would say it's like the risk arise from these additional areas. On travel and expense side, I would say the future or the near future solution would be to link interface internal systems with data captured in internal systems by the employees with that data what is needed for a tax authority claim. But also an interesting question is how to deal with authorities. I think it's like if you submit 20 hotel invoices, probably it will not hit the bomb out with the authorities. If you have multiple different purchases, it might become interesting. When we are talking about risk, what risk of incoming invoices we are talking about? Risk of, for example, an establishment, time spent in a foreign country by your employees, whether questions could arise on the permanent nature of that presence in that country. That could be from a corporate tax or from VAT side, could be also questions around it. So, for example, if you have people sent for a supply and install project, that could also kind of like raise a flag. Is for VAT purposes that creates a need for a VAT registration. Is that a fixed establishment somehow for VAT purposes? So for that one, you should register for VAT, and in that case, the risk what we are creating is much bigger than the hotel expenses, because we have the incoming invoices with the hotel expenses, but we have for example, a turnkey project with a much higher amount of sales, if that or sales revenue. If that would be brought inside the country and say, okay, you have to pay taxes on this one, I would say the risk would be far exceeding that potential recovery. Also, a question is when you have local purchases or imported goods, where you have import VAT somehow on these imports, what happens with the goods after that? If you sell it locally, then very likely you will have a VAT registration liability. That also creates a risk for that. And the technology solution, the purely technology-based solution, will not be able to handle this. And but why we are also interesting, if we are talking about technology solutions, they are looking at eligibility for invoices. What interesting is that we not necessarily see such a strict review on invoices when we are talking about local purchases. So, for example, if I don't have a foreign VAT, but I have in a given country I have VAT registration and I have purchases that are done locally, or I have even an establishment in a country, there are lots of incoming invoices that do not go through the normal accounts payable process. And it might be interesting to see whether these invoices are really eligible for recovery locally. The technology solutions at the moment not necessarily look at this because they look at foreign VAT recovery.
So PwC Switzerland has developed a solution called Global Reclaim Assessor to manage the VAT refund claims globally. What is Global Reclaim Assessor in the nutshell, Janine?
So we developed together with the IT department here in Switzerland the so-called Global Reclaim Assessor, in short GRA. So we have developed it to manage the VAT refund on a global basis, and it is entirely managed here in Switzerland, but we wanted to ensure that a review of the risks are made, and therefore we are supported by various local teams all over the world. So GRA is actually covering 149 plus languages. And it was also developed to process high volume of documents. And we have also automated some some processes entirely. So we can have now a look how it is actually working step by step. So the Global Reclaim Assessor is, first of all, we gather all the relevant invoices, then we assess the VAT eligibility, so meaning is an invoice as such really fine? Does it qualify for VAT reclaim purposes in a specific country? Then the next phase, that's number 3, is gathering invoice data, meaning all the data relevant on the invoice and in the specific country are put into GRA, and the VAT report is then finalized and issued. So let's have a look at first step number 1. So step number 1 is gathering invoices. So it can be every single invoice, not only T&E invoices, because we are covering the risk for everything a client would like to really cover the risk. The invoices can provided by to the GRA by uploading the invoices as such, or some clients really like to send us some boxes and then we are doing the scanning and upload the invoices into the Global Reclaim Assessor online platform. So in the first phase, we are checking the completeness of invoices and the validity of invoices. Can invoices be read? Are files corrupted, or is everything just fine? If everything is fine, so these information and these invoices are directly dispatched to step number 2, and these are the review teams in the various countries. Step number 2. Step number 2, I think that's the most important thing. It's the assessment whether an invoice is actually fine from a country local perspective. In this phase, the team assesses the submitted invoices, check key information on the invoices, are vendor details available, is the VAT or GST number on the invoices, and if everything is fine, the results are put in a specific template. But only these invoices where we can say, okay, they are in principle fine and they qualify for VAT reclaim purposes, are then going to the next phase, to step number 3. However, as soon as we see invoices which are not fine and do not qualify for reclaim purposes, a VAT report will be prepared, and the client can see all relevant information, what was actually wrong, what's not fine. So this serves also as a basis with the negotiation you then might have with the different suppliers. So going to the next phase, where we know that all invoices in principle qualify for refund purposes, so the local team provides the relevant information which are necessary in the specific country into GRA, and GRA is compiling the data, the necessary data, and calculates the VAT to be refunded. And then we go to the next step or next phase, that's the last one. So an Excel report will be prepared and lists all relevant invoices and all relevant information so that the VAT reclaim can be prepared and submitted.
What is also important to say here is, like, based on the single point of contact, we have a full insight of the whole process, and beside the eligibility, the fact of looking at the potential risk is throughout the process is there. So it's like if in any step there is an indication, there is a question mark, then we can come back and with discussing with the client, also look at the potential risk, kind of like analyzing it, showing it to you what risk could arise, just before we are really talking about eligibility or going for the refund.
So in addition to reviewing the possible risks related to the VAT refund claim, what are the other benefits for the clients for using the Global Reclaim Assessor?
So the benefits for clients are actually that there is very little effort from client side, because everything, once the invoices are uploaded to the platform, to the online platform, it goes automatically, and it's actually monitored by the project lead here within PwC Switzerland. And what is also very important to mention is that clients can also ask for specific risk reviews, as already mentioned by Scholt formerly. So to please having a look at potential PE or other risks in specific countries, so one can do that as well. So we can also prepare a format in the reporting the client wish to have. So we are quite flexible, also doing dashboards and so on. And the most important thing, I think, is it's no longer really relevant to send emails back and forth. You can store everything within the GRA, and everything is actually managed on this platform, this online platform.
Okay, so if I may summarize what we have just discussed and what were like the main topics of our discussion, and please, Janine and Scholt, please correct me if there is anything you would like to correct or add something. So when we are talking about the VAT incurred on expenses in foreign countries, the travel expenses are the most common ones and constitutes the biggest part of the refundable VAT in practice. But there are also a lot of other expenses on which the VAT could be claimed back. In practice, unfortunately, the foreign VAT quite often remains as a cost, as the companies do not apply for the VAT refunds from foreign countries, for example, because of the high costs of reclaiming of VAT. And now is the time to reclaim VAT from foreign countries from last year. And there are many different service providers who can support the companies for reclaiming the VAT. And in addition, the service models can vary a lot. So for that purpose, when choosing the best partner for this purpose, it's essential to make sure that also the possible risks related for applying the foreign VAT are covered, such as the risk of the permanent establishment or the VAT registration liability in foreign country. And also PwC Switzerland has developed their own solution called Global Reclaim Assessor, which works on an online solution, and you can use that for reclaiming of foreign VAT, or, for example, going through the deductions of the VAT in the country where the company is VAT registered. Would that be a fair summary of our discussion?
Right, and that would be a first summary. I just want to put one more thing before, just like a step zero, because it's like, I would say for every company or for every indirect tax or tax function of a company, the first step would be just really to know how much money we are talking about. So just, I would say this is one of the key performance indicators could be for a tax function saying, do you know how much is the foreign VAT that is your company losing? That's the first step that you have to really do. And then, knowing that how much is from that VAT coming from travel expenses, how much is coming from other sources, and based on that, we can go forward with this whole analysis, what you said before.
Okay, thank you. So let's look if we have received any questions from the audience to our presenters. So here is a question regarding Global Reclaim Assessor. How do you make sure that all local rules are followed when the claims are processed? Janine, could you please comment to that?
So I think the most important thing is that we really wanted to have a sustainable solution, a sustainable online solution, having also local teams involved, because we had many clients saying that they face many questions from our tax authorities after they filed the documentation, and we wanted to avoid such kind of scenarios. So the local teams really ensure that everything is actually fine. And as said, we can also cover much more risk than just reviewing invoices, making sure that they are in line with the local rules.
And then the other question, what I should do if I have the foreign invoices in the box in my office? Do we have any practical guideline what to do next?
So interestingly, there are some clients, they have still some original invoices available, and then they were asking, can they really send us some boxes? And then we said, yes, sure, they can do. So we will scan the invoices. We have already a team who is actually scanning invoices and then is going to upload it into GRI directly. So no problem if someone still stores original invoices.
So only address to the box and then to the post office.
That's correct.
Good. Then one question regarding the pricing of the global reclaim assessor. So what kind of a pricing model there is? Is it different compared to the competitors?
That was also a request from various clients. And the request was that they do not want to have any longer the success fee basis, whether we can develop something else, and we did that. So we can either have a fixed fee or we can really negotiate a fee per invoice processed, not the invoice which are not processed to the last step, but the invoice which are actually processed. So I think that's also a very comfortable situation where clients can say, okay, I would like to have either success fee basis, a fixed fee basis, or a fee based on the per invoice processed.
So in other words, the pricing is quite flexible depending on the client needs. Okay. Is the also when we are thinking about the solution itself, if I understood correctly, this is also something that can really be modified based on the client needs and the process around the whole reclaiming. Is that correct also?
That's correct.
Then Zsolt, maybe the question to you. So what do you think? What will happen to the VAT refund system in 5 years? Do we have still the same kind of a system, or do we see something new or something totally different?
What the future holds, I cannot say, because I cannot look into a magic sphere. And I think this is what is it called in English. What we can see is that the indirect tax landscape is really changing rapidly. There are new countries coming with VAT systems, new VAT, GST regimes go live, for example, in Middle East or all around the world, or existing systems change. Outside of the EU, lots of these systems have really a limited possibility for recovery for foreign companies. However, I would say that following on the EU, I think also OECD is looking at VAT as being of a kind of like indirect taxes being of a neutral tax or with a neutral effect on businesses. So I would assume that more and more countries will move into the direction that they will be making possible for foreign companies to recover VAT, GST, and they also technology changing rapidly this playing field, what is happening around indirect taxes. What we could see also in the EU, that electronic invoicing that is already around us for the years or decades now, maybe probably that's a better way, it's already forced authorities to move around, because if on the old business model sending hard copy documents and trying to find something wrong point for some kind of a formal mistake on it, that is not working anymore when the significant part of the suppliers are already using electronic invoicing. So these forces also changes how the tax authorities behave, and besides, tax authorities also forces industries how they behave. Obviously, travel expenses are not there yet. So, and if you go to a hotel, then you will most likely get a paper invoice at the end. But that could change rapidly. And I think similar how it is done for VAT recovery for foreign private travelers at the moment, who they can recover VAT when they leave the EU with a stamp, and it's like there are specified service provider for that ones. I think in the hotel industry might be pushed into this direction, that they have to they will be forced to offer some kind of an assistance with the service provider to the foreign firms where they send people and they leave, they stay in the hotels. Also, on the service provider side, it's obviously at the moment we are at the time and we are like learning from the human interaction or from evaluation. It's moving to the side when it's the assessment will become automated or partially automated for low value invoices, especially using machine learning in the future, where certain risks will still remain, and that should be somehow handled in practice with the companies or with the service providers, really to identify these risks. Full electronic communication with the authorities, it's not only a change how you interface with the authorities, but I would also say that this is also changing what the authorities will do on the other side. So for the reviewing of application and refund and everything, that will become automated on the side of the authorities, because it's like, I remember 20 years ago when somebody sitting at the tax authority and getting a box of papers that was sent by the provider, and they were going through the same box of papers and doing the same things what the provider was doing. Probably that will be not happening in 5 years anymore. And there are technologies coming that we, honestly speaking, nobody knows how it will change the whole landscape. For example, blockchain, that for verification of transaction or eliminating or treatment of the transaction or eliminating totally the VAT charges on these transactions when it's a foreign business or foreign businesses on the other side. That probably that will not come in the next 5 years, but maybe in 10 years' time there will be already something like that here.
Okay, thank you so much, Jenin and Zsolt, for your comments. So our webcast is coming to the end. I would like to thank our audience for participating in our webcast, as well as my dear colleagues who were presenting with me today. Our next session in the Tax Technology webcast series will be on Monday, 25th of June, where we will discuss how to use technology to track and manage tax risks globally. Thank you once more, and we hope to see you in our next Tax Technology webcast. Bye-bye.